All right. Hey, welcome to Ask Me Anything Happy Hour. So grab a drink, get your questions ready. We got a couple people on the team here ready today. We'll go through some quick introductions. We have a new face for you, Mr. Christian Brown, and I'll do a quick introduction with him here shortly. But get those questions ready. We might have a couple more people logging in. Let me run this quick little intro video, and we'll be right back.
Barrel of the gun always gets me thinking about Cypress Hill there, man, every single time. The shotgun pumping action. Stephen Nagy, tell us about what we're doing here today.
We're jamming out, baby. We're jamming out. So it's Wednesday, end of October. The month is flying by. Headed out to Vegas tomorrow for the Experience Mastermind. About half our team's already headed out there. The rest are meeting out there tomorrow. So got a light crew here today, but I think when we put our minds together, Jason, myself, Christian, I think we'll be able to answer your questions pretty good. So get those questions ready. But my name's Stephen Nagy down here in South Florida. And yeah, man, I just been a long day today. A lot of good meetings, a lot of really exciting things happening with all the companies, with Private Money Club and BYOB Money Multiplier and everything else. And some good calls with different clients, some new agents, some new brands, some new relationships, and always growing, always getting better. And that's what it's all about.
Stephen, what's your mission, man? You do so many things in this ecosystem around the campfire. I'm going to put you on the spot, even though there's not really a spot. But what is here? I'll point at you. I got it wrong. What is your mission, brother?
My mission is to teach you how to take back control of your money and solve your money problem. Keep it easy, baby. Keep it simple.
That is an easy mission. Powerful too.
That's why we have a
Christian Brown
motto, right? Yeah, but Jason. So let me introduce Jason real fast, and we'll move on to Christian. But Jason has been a money mentor now for quite some time with us, and does an amazing job with all the clients. And he was just telling me about some of this new podcasts and webinars he's been hosting. More around family and being a father and being an Iron Man and all the cool things like that. So, what do you got going on with that, Jason?
No, thank you. It's called Founding Fathers, and it was actually helped named by someone in our ecosystem who I was like, man, I got this idea. My idea is, how do I inspire and educate fathers and their families to avoid financial failure, live their legacy, and make a positive impact in their communities? Our country is $33 trillion in debt and escalating every day at $1.1 billion per hour. Our savings is at 3.5%. They're associated with each other. It's a direct correlation, Stephen. So if we're going to change this country and make it great again, we're making money great again, we're making things great again, let's start with the family. Let's start with living our life intentionally the way we want to do and go out and build that community. Because if we teach, we create that legacy. So thank you for letting me know. Well, I'm going live 3 times a week, 3 p.m. So catch the next one Friday, and then I'll be changing next week to Tuesday, Wednesday, Thursday. Jump on and check it out.
Yeah, very cool, man. Are you going live on Facebook, or is it just through the Zoom?
Live through a Zoom webinar.
Okay, cool.
And then you can teach this tech not savvy yet guy how to broadcast it live in other places too. We'll get to that.
Yeah, one of the cool things with Zoom though is you literally just hit one button, it'll at least stream to Facebook for you. So we'll get that going.
I saw that, but it scared me. It was a new button. I have not touched that button. So much growth so fast. I don't want to break stuff.
There you go. Shout out to my son Bryce. I heard he is watching on his iPad right now. So what's up, big guy? And thanks for following.
Bryce got abducted by aliens, I heard. Is that true?
He's 8 years old, man. So you got to teach him young, right? He'll be one of our youngest money mentors. See, Greg Hurling thought he had that one with Carson joining the team at 20, but I'm coming for you, Carson. My son's coming for you. But all right. Well, we have a special guest today, and he's going to start being a regular fixture on the show. And this is Christian Brown coming from. There we go. Christian Brown coming from One America with the long-term care division. So we do obviously a lot in the infinite banking space with our specially designed and engineered whole life policies. A lot of business that we write is through a carrier called One America. A lot of you probably have policies with One America, and One America is known. A lot of you might not know this yet, but One America is really known as being the top long-term care provider in the country, and they do a really incredible job with it. And it's something that I've been learning a lot about, just, as our parents are starting to age and we start to see different things happening, and, how do you deal with that? How do you handle that? Things like that. And so it's really caught my attention here lately. So I've been working with Christian and Kevin from One America on, how can we bring more of that education and the importance of it into our, campfire, into our atmosphere here. And so Christian, was very kind to say, listen, if you guys, want, I can hop on Ask Me Anything. And that way, if anybody has any questions about long-term care or about, anything outside of what we do with IBC, like, he's right there to answer those questions and is, more than happy to chat with people. So I was like, hell yeah, that's awesome, man. I love it. So Christian, thanks for coming on, man. But maybe you can just do a quick little intro, like what you guys do with that, and start there.
Yeah, absolutely. Stephen, I appreciate it. Jason, it's been great to meet you guys. So like Stephen said, my name's Christian Brown. I am with One America, and we work really closely with the Money Multiplier team here. And what we're trying to do is help educate, like he said, you guys, on the need for potential long-term care insurance. For those of you who haven't experienced it yet, you're lucky. A lot of the folks we talk to, a lot of the general public doesn't have a great understanding of what all goes into a long-term care event. If mom or dad needs to go to a nursing home, something like that, until they experience it. So a lot of the folks we talk to that come to us and ask about it usually have that experience. So we're trying to get ahead of that, provide some educational things and some solutions on how we can protect not only ourselves, our portfolio and our savings, as well as the rest of our family. If something were to happen, if mom or dad, if you guys, somebody in your family needed to go to a nursing home or need some form of long-term care. So what we do is, like those whole life policies you guys use for infinite banking, what we sell is called asset-based long-term care. So it's tied to a whole life insurance policy or an annuity. What that does is lock in some guarantees, make sure the money for long-term care is going to be there when you need it. And we have a unique way rather of designing and implementing these policies to fit you where you are, not making you fit where we want you to be necessarily.
And I know there's a great, Christian, thank you for sharing. That's amazing you're here. I know that is part of the journey no matter what. Like, we're all going to the same place. And I've heard this said often, that it's not that you don't have the money for a lot of people. It's you don't have the resources. You don't have the people that can actually execute and take care of. And this is part, I've had a couple conversations with Kevin already for my family. Like, I know this is part of my planning. So like everything we do here, like Stephen was sharing, all we're here to do is help people build their wealth with certainty and take care of their family. And it has a lot of pieces. Like, think of the family office that the Rockefellers and others had. We're making it simpler by bringing you to pieces, piece by piece. And Christian, and what you're doing is a huge, huge part and gift to be here. So thank you, man.
Absolutely. Yeah. To piggyback off that, Jason. Yeah, you're right. It's a resources issue, not a money issue. But what it also does is protect the rest of the money that you have worked so hard to build and save. So it's a very important piece of the whole puzzle.
We got two more mentors, Stephen, here.
I know they're hopping on, man. I mean, to the streaming on Facebook thing, Drew said, I'm pretty sure you can also stream to YouTube with Zoom, but I don't know what Drew would know about YouTube. So he might be wrong about that. I'm just kidding.
Drew swims laps. He figures stuff out, and he does some YouTube stuff, I heard. So yeah,
Drew's one of the top YouTube experts in the country. So I'm just joking around. But all right, I'm going to put the link for Jason's show on there. But we did get a couple more money mentors. So Carson Hurley, who I just said Bryce is coming after. How old are you, Carson?
21.
You started when you were 20?
19.
Oh, man, it's going to be hard to beat. All right, we'll see. I said Bryce is on watching the show right now, and I said he's 8, so I got him coming for you, dude. I'm going to try and make him a money mentor before 19. That's my new goal now.
Good 16, man. You got to get him.
Here too, so we got goals.
I'm just playing. What's up, Garson? How are you, man? What's new?
Doing way good. Thanks for letting me join you guys. Sorry I'm a few minutes late. Yeah, nice to meet you as well, Christian.
Yeah. And then, Joe, what's happening? You driving?
Yeah, we're driving, going to see Ariana's field hockey game. But you have to beat Ariana. She did the video at 10.
Oh, all right. All right.
Infinite banking so easy to explain by a 10-year-old.
Nice, man. What are you driving, your Pinto?
Yeah, my Chevette.
All
It's
right.
not even driving; it's driving for him. You just
We
sit
got
there.
any questions in here? I'm going to put the link in for your show, Jason. All right, let's see here. We got welcome, Christian. All
I
right.
haven't seen any
Well, where's
questions.
your playback available? Stoked for a new speaker in the house? Who's the new speaker? I've been on meetings all day. I haven't seen anything. Who's the new speaker?
That's Christian.
That's right.
No.
No.
All
The house in DC. I have no idea. Is there actually news happening in the world? That's what WTF is for. That's Steven. That's Steven's dad.
Yeah, the House of Representatives Republican majority speaker has been MIA for the last couple of weeks after they booted the last guy. So it sounds like they finally elected someone new. All right, we'll have to look into that later. All right, here we go. I've been trying. Okay, here we go. So here's a question for the team. I've been trying but cannot get approved for long-term care for myself due to chronic illness. Sound like you may have something for me. Anything on that, Christian?
Potentially, yes. Now, while our long-term care policies are still underwritten medically like life insurance is because we are buying a death benefit, we do have some ways that we can finagle some interest, some illnesses and some health conditions. It depends, obviously, what it'll be, but these policies aren't as heavy with death benefits, so the underwriting typically is a little bit easier than other long-term care underwriting and other life insurance underwriting in the industry.
So Christian's like, I want to say the answer, but I am being recorded on live stream right now, so let's maybe just set up a call and chat about it one-on-one.
Absolutely. So I'll put it in the chat, but you guys can reach me at ltc@money-multiplier.com.
Put it in there.
And with that, I mean, Christian, the best answer for this show is typically 2 words. It depends. Unless you're
That's
Joe,
exactly
then
right.
But it depends. It's an it depends answer. We got to have a conversation about it.
All right. Good one. That's right, Damon. Always talking Carson up, man. Carson's the man. Look forward to seeing this weekend, Carson. All right. Let's see. Mike Johnson. Oh, yeah, Mike Johnson. Not from Los Angeles, but from Louisiana. There we go. All right. So Mike says, dude, Christian, I'm going to stop inviting you, man. All the questions are for you now. But here we go.
I was thinking that's the opportunity.
If we set up an infinite banking policy and add long-term care, won't that mess cash accumulation up? How do we go about that?
So it is going to be a separate contract. So it's going to sit side by side, but outside of the IBC contract. Now, some of the policies, specifically with One America, have what we call chronic illness riders, but those aren't exactly what I am talking about. So those chronic illness riders will allow you to access the death benefit while you're still alive. But these policies allow you to do that, as well as extend benefit payments up to a lifetime benefit. So as long as you may need it.
Cool.
Great answer. So separate. Separate was the answer. We're going to keep them separate.
Here's another one. Dexter, the long-term care policy, can you attach to current policies you have now if you're with One America currently? Okay, so that's what you kind of just said.
Yes.
All right. And it was severe asthma and diabetes. So yeah, I would just email to me. So I'll just email Christian and maybe you guys can talk through that, or maybe there's some other options.
Well, I just see a new show. We have a new show on Thursdays that's going to be centered, or Wednesdays on the Ask Me Anythings. I don't know how often, periodically, about LTC. We come in, we learn with Christian, we answer questions, and we say how they work. They work not together, but they're interdependent of each other. Right? It's like going out in the world, like when you're working, like you have Private Money Club. Private Money Club is not infinite banking, but you have to move your money. So they're interdependent. They work together. They coexist. They're synergistic. That is what this message is.
Yeah.
Love that.
Dexter's been running around old folks' homes at 100.
I believe that.
All right. Is there a need for long-term care policy when I have a whole life with chronic and terminal illness riders at 26 years old?
At 26, you are good. We cannot issue below the age 35. So right now you are exactly where you need to be, Linus.
Sorry, Carson. You got a long time, buddy.
That's right.
Can you imagine, Steven, if we would have learned about this stuff at their age? I can't even imagine. Like, what the heck? So, it's amazing.
Crazy, man. Mike said, I have a friend that would like to set up an account, but isn't a citizen yet. Can he start a policy?
Yeah, it always depends, right? Does he have a social security number yet? Does he have a green card, visa? What's the situation? There's possibilities. Yeah.
A bank account.
It's not
if not, Chris has a video that teaches you how to use IBC outside the United States. So we can help you with that too.
Yeah.
At least the concept, right? The process of.
Right, cool. All right, throw those questions in, guys. And while we're waiting for those, Joe, got anything this week? Anything crazy happening? What's new?
Yeah, hopping on a plane tomorrow and going to Vegas. What about you?
That sounds about right.
You guys driving cars in Vegas? What are you doing in Vegas? What's happening? Is there any tickets left for Vegas? Somebody tell me. What if I wanted to go right now?
No.
No more tickets.
Everybody's invited unless your name's Jason. Then
Oh man, there's gonna be a Jason there that's gonna be salty at you.
Yeah. What are we doing tomorrow night? We got a big dinner. We're meeting a bunch of people. Friday, we're there's just a bunch of stuff happening. We got like
Beatles.
Yeah, going to the Love Show.
The Beatles.
Dinners and
Beatles is on. Yeah, Beatles is on Friday, and Racing Cars is on Saturday.
Well, I know that at one point Friday we got like 2 hours where Chris and Brent are going to teach real estate and private money lending, getting rich the slow way, and I'm going to teach people how to gamble at the roulette table and get rich quick. So you can join whichever one you want. I'm just waiting for Chris to hit the ATM machine and get me a few $1,000s to start with. So, but we'll see how that goes. Anybody go into the experience, you guys keep that in mind.
You got to go for it. Yeah.
And Dorothy and David, I heard what happened. I'm so sorry, guys. We're praying for you. Hope everything's okay. We'll really miss you. And I know you guys can't make it, so sorry to hear that. John B., you can contact Christian by emailing LTC at themoneymultiplier.com. So LTC at themoneymultiplier.com. Or you're more than welcome to email any of us if you have our emails instead, and we will connect you with Christian. Let's see. How can you start an IBC policy on your child minor regardless of health?
I'm going to go with an it depends because I'm
As
not
long as
sure
there was
what the
Social
other
Security
variables
number.
and context are. The way that kids' policies are designed, as a whole, is a reverse engineered. The insurance companies want to see, these mutually owned companies want to see insurance on the patriarch and the matriarch first. And if for some reason the parent can't qualify, then yes, you can still insure the child, but it's going to be whoever has the most insurance. To go back, if the parents are insurable, whoever has the most insurable insurance, it's going to go reverse engineer off that, be half up to a certain amount of money. And because kids are so young and they have such a long lifespan, it's usually not a lot of money. It's pretty hard to get a lot, and we reverse engineer them too because you want the longer term growth. So that's a lot of answers for that. But if you have more context, Jay, we could probably give some more answers to you too.
So I actually had a client this week who I met with who we talked about policies for him, his spouse, his kids, and him and his spouse are getting 2 pretty large policies. And we talked about his kids, and I have a question for you guys and what you guys would have thought here. But he was like, well, if I can only put a $500 a month into each of my kids' policies, that's not really helping me when I'm putting in, I think it was like $100,000 a year. He's like, this is not going to help me buy real estate. It's not going to help me do anything. And it's so little money for them. I'm going to be supplying them with a lot more in the real estate world in the next 15 years. So he's like, I'm just not going to get policies on my kids. What do you guys think about that?
I would say he sounds like he's looking, my immediate reaction is he's looking at it from an investor standpoint versus that looking at this as a lifelong process that he can teach his kids and their kids and all the future generations. right? This is what the wealthy have been doing forever. So why wouldn't you get your kid excited about having a bank, have them the things that they maybe want, have them financing it through their own bank and paying it back with their allowance, and actually showing them how that money is still growing. And then if you can build something a little bigger too, I mean, it's going in and finding out how could I get my kid insured for more possibly? Like if he's doing that big of a policy, depending on his age and all those things, I imagine that's going to have a high death benefit on it.
Mm-hmm.
So then it's going in and painting the picture. Can we get that number increased to where he'd be comfortable? But I'd go back to the process. And how could he have them be excited about it and learning about it?
Mm-hmm.
I would have told him he's wrong. I said, you're wrong, dude. You're wrong. Sorry, but you're wrong.
Yeah, that's pretty crazy to me, saying don't think it's worth it. I mean, when you see the compounding of that through the lifetime of the child, I mean, whether they're super wealthy or not, like there's still a huge benefit there. And then not to mention is what happens, they turn 15 years old and God forbid they get cancer. That's, or some kind of, something happens where they no longer can qualify for life insurance the rest of their lives. At least now they have something to be able to pass down to their generational family. I mean, so there's so many things in life. I mean, that's at the end of the day, that's what life insurance is all about, is the what ifs, protection. So it's like, why, and if it's an insignificant amount of money, then why wouldn't you? I mean, that's the better question, is why wouldn't you do it? I mean, if I
that
could
would be the reason. Yeah, exactly, Stephen. You just said it. That would be the reason why you would want to start it, because it's not that much money to start it.
Yeah, I mean, look at this policy. So this is the one that Chris did for Vivi, and let me get this up screen. This is the one Chris did for his daughter Vivi when she was 1 year old. So putting just not even $500 a month in, $5,000 a year. So what is that? $433 a month. So even less than that. So it just shows you all the money going in. And this is, so they assume when she's going to college at age 18, they're going to pull $20,000 a year out of the policy. Never repay that, which obviously goes against what we do, but just to show for the illustration. Then when she turns 29, say she gets married, pull $40,000 out for that. When she's 32, she needs a house down payment, pull $60,000 out for that. And then you could say, okay, now her kids need to go to college, so $30,000 a year for that. And then in retirement, pull $90,000 a year out of this policy, starting at age 64. Again, never repaying or recapturing any of this, just pulling it out via the loans. That $90,000 a year, basically for the rest of her life. And then you get down here to the bottom. Let me just zoom out. So you get down here at age 90, put a total premiums in of $398,000, took $2.73 million of loans out, cumulative cash value of $5.5 million, a net cash value still of 2.9, almost $3 million, even after pulling 2.7 out, of a net return of 738% at that point, and still having $4 million in death benefit that'll be passed down later. So like, why wouldn't you do that?
Yeah, this is a great example. Can you actually email me this document? I've never seen that before.
I was going to say, Carson, you need to send this to that guy so he can see this. I was going to share something not as powerful as that, but like I'm working on Connor's right now, and it's just waiting for the pediatrician to send back the information, his health stuff. But I was looking at his. He gets to 30 years old. Basically, he's 9 now, so 12 years from now, we put in 4,000. The cash value grows by 24,000. So it grows by 20,000. So that's a 500% return.
Mm-hmm.
I mean, it is a no-brainer. Like, why wouldn't you do that?
Mm-hmm.
Yeah, I started prices at age 6 and just $5,000 a year and just mimic Chris's that he did for Vivi, and it really is. It really is pretty amazing. I mean, and then not only that, but it's also then the education factor. So when your kid turns 16, you want to buy him a car. Well, what do most people do? They go get a loan or they use cash. Well, getting a loan, now all that interest goes to the bank. Use cash, now that money's gone forever. You're never going to be able to get that money back. It's in the car now. But what I'll do with Bryce, I'll teach him how to buy the car using the policy. So not only are we going to keep all that money and recapture all that money and have that car pay for itself through the policy over the next 5 to 6 years after the purchase, but more importantly than any of the financial parts of it, it's going to teach him how to be the bank, how to become a banker and actually practice infinite banking. And back to your point, Jason, earlier, like imagine if we learned about this stuff at 18 years old, at 20 years old, at a young age, at 10 years old, in Joe's daughter's, case. What does that look like then for your financial life? I mean, real estate investing, great. Like, to me, it's one of the most powerful ways to create, grow wealth, maintain wealth, real estate, 100%. But how many real estate investors do we know, Carson, that are making millions of dollars, that when they learn about what we do, especially design policies, they're like, holy shit, like this takes everything I'm doing to the whole next level. I mean, it happened to me, it happened to Chris, it happened to your dad, it happened to you. I mean, so it's like, it's not an either or thing. So many people look at it, well, I'm doing a real estate, so I don't need this. It's not, it's and at the end of the day, that's what it's all about.
I love it. Great thoughts, guys.
I was waiting for Joe to get super excited. The word "and" was say, "Go ahead, Joe. What is this all about?" And he can't get any audio. I'll say it for you, Joe. It's always an "and" choice. It's always an "and." It's not this or that. It's not this or investment or that. It's this and that. This and that.
I got to figure out how to get a mute button for Joe, like when we're in person. That'd be cool.
I don't know, Joe.
Okay, now I got the button back. That wasn't funny.
Oh my God, he's gonna shoot me.
The word of the day is "and." There we go. I finally got it out.
I like it, man. I like it.
Nice job.
All right, excited. Chris George says he's excited. He has a call with Jason tomorrow and looking forward to some details for his first policy. Sounds good, Chris. If you don't like Jason, give me a shot. I'll probably help you better.
Yeah, Steven's the best, man. I agree. Totally agree. He'll be in the air flying.
Please don't
if you want to wait for him to land, it's cool. If I be gambling and losing all his money, he'll curse at you. It'll be cool. I won't do that.
Let's see. He found out his current term policy can be converted. My agent kept telling me that the IUL is a better way to go. Looking forward to. Oh yeah.
Oh, I got an IUL story. Chris, can I tell you an IUL story? Team, can I tell you an IUL story today?
Go for it.
I talked to a guy who's had his IUL for 13 years. 13 years. He puts a fairly significant amount of money in his IUL. He ran the spreadsheet. He's a spreadsheet guy. His return on the policy, the growth, guess what it was in 13 years? Average.
Average return a year. I'm going to say 4%.
Nope. Who wants to guess next?
2.
Nope.
2.
Nope. 1.6%. 1.6% return.
Oh.
So he figured out that he's probably left about $70,000-$80,000 of growth on the table. He has about $80,000 of cash value left. Actually has a loan out. He actually was spending money paying the loan back before he found us and got on a call with me today. So now we're converting that. It's doing absolutely nothing. So now he can actually he's going to pay for his 3 kids' college or kids' tuition, school tuitions through his policy, and then he'll learn all the other stuff he can do with it. But now he'll actually have a guaranteed environment for growth for his family.
And that's with one of the most bullish market cycles we've ever seen in our lifetime over the last 15 years. And he has that kind of growth. I mean, imagine what that thing would look like if we go into a bear market, a recession, if we start really seeing some down years in the markets, which most people are saying is going to happen. And he's making 0 in that thing. And the cost of insurance just keeps going up. Like so many of these IULs and things, I just feel like are going to lapse and just going to be not good for people, man. But
there's a great speaker that came and spoke at the symposium. Maybe Christian will remember his name, but I know that he's someone that he speaks way over my head because he runs all these charts, all these graphs. He's a brilliant dude. But basically, when he was telling how these funds are created, how they figure them out, they're basically created by a group of really smart people sitting in a room saying, okay, let's create this. And then we're going to pretend it existed before this point and go back 10 years. And we're going to call this a historical return. It's just made up stuff. How is that even possible? Like, it's so bizarre. I have a hard time explaining it, believing it when I say it. I think people are saying, Jason just likes IBC better through whole life. And it's like, no, when I saw this, it's like, it's insanity. It's literal insanity. What's his name, Christian? Do you remember?
Yeah, I don't know how it just came to me, but it did. Bobby Samuelson. He went all the way down the rabbit hole and talking about explaining the math on how these guys come up with the rates of return, and it was pretty crazy to see in real time.
Yeah, it was like Ivy League dudes sitting in a room by themselves for hours, seeing where they could get the biggest return that was legal to show, and then forecasting it backwards and telling you that's what you're going to get. Literally. Like that's Bobby Samuelson's thing. 45 minutes to an hour and a half broken down in 30 seconds.
That's cool.
True, Christian? Was that true?
Yeah, that is. I think that's a very good way to put it.
All right. Linus was saying you can usually do an extra dump in on a kid's policy of around what the annual amount is. It's good to know.
Linus is a genius, man. He created some of the best designs I have seen today, like just things I've never seen us do. And I was so impressed. So I already told him, like, listen, I'm tech adverse. I've said I've tried to learn from Jonathan Whipple multiple times how to do illustrations, and he's been super patient with me. I'm like, Linus, one day you're going to teach me and the team how to really understand this to the next level for those that don't do illustrations yet. So
yeah. So Drew set up his kid's policy when he was 2 months old, which is cool. Let's see, Mike. Just email one of us, Mike, and we can send you over that at Vivi. We call it Vivi Lucky Jeans. Can you explain the concept of recapturing the interest instead of paying the bank the interest? Aren't you just paying interest to the insurance company? How is that being paid to your bank? Who wants to hit that?
Who wants this? I'll take it if no one wants it. Carson, you got it?
Sure. I mean, the way I look at it is if you have a car, for example, and this car balance is $20,000 and you pay $300 a month for it, and the interest built into your payment is 4%, right? Let's go off those numbers. Then within your $300 a month payment you have, a portion goes to interest and a portion goes to principal. So if you use a IBC policy to pay off this car completely, you now freed up $300 a month, which a portion was going towards interest, a good amount most likely. So if you then now can put that $300 a month you just freed up into your policy back to you, you're paying yourself every month. That is included. The interest is included in that $300 a month. You are now changing where that money's going. So yes, you do own the insurance company interest on the loan, but it is simple interest. And as you pay your loan back, the interest will decrease because you're paying back the principal. All of it's going to principal. And not to mention, you're earning interest on the whole premium you put in the policy to start with. So forgetting that piece of this, just paying back $300 a month that you were paying to the car note company, you are now recapturing that interest.
Carson, that was an awesome explanation. I'll give you an example. This year, we recaptured 9 third-party debts. Forget what the interest is, anywhere from 3 to like 26%. It's $2,200 a month. That's $26,400 that I paid back to my segregated account. Now that, and I've said this a couple times on this webinar already, the interest is $3,711, a simple interest due at the end of my calendar year. Do the spread on that for me. 26,400 minus 3,711. So to be an honest banker, the least thing I can do is pay back that simple interest. If I have a better use for that money to go have it work somewhere else. That's what it is, moving the money. You have to look at what the money's doing. So TY, like, you're thinking, oh my God, I'm taking one loan and using another loan to pay it. How's that paying me back? When all the money that you're saving is compounding forever, uninterrupted, infinitely, and you're using that same dollar. There's nowhere else you can do that. Like Brandon always says, if you guys figure that out, email us, tell us, we'll switch and start talking about that tomorrow. Literally.
I mean, I was doing it for 14 years with a HELOC until I was able to use this policy. And now I'm making 1% just in year 1. After year 4, it's just uninterrupted compounding, and it just keeps on growing and growing and growing, you know.
All right. Asking any events in South Florida, Orlando. I don't know of any live events. We have our virtual event coming up November 3rd, 4th, and 5th. So if you've never been on that, it'll blow your mind. We record the whole thing, so you can come back and watch it later. But it's our Money School Essentials 3-day foundational virtual training, so you can hop on virtually, and it's a really, really good 3-day training. But I don't know any live events coming up in this area. Do you guys?
No, but I'll say about the Money School event. I mean, J-Rock, that'll blow out any live event that's going to be in South Florida or Orlando, unless, Chris and team and we're putting it on. Like the Money School, I've learned more from the Money School than I have my previous 49 years of what's possible, how to work people with people, to work with people that you actually like, to actually move something forward together, versus like trusting someone that says they're an expert, that talks a lot, that says really fancy stuff that you have no idea what they sound like. You sound like Charlie Brown's teacher. So go check out Money School. You won't be disappointed. It'll give you a lot of opportunities to learn things. You love that, Stephen. Now you're trying to make Joe laugh, huh?
I like making Joe laugh.
It is fun.
All right.
I like laughing.
I might have a misunderstanding. Are you able to take out from policy once a month, or do you have to recapture first, then take out?
You don't have to pay back
as long as you have
loans.
cash value, you can take it out.
Yeah.
But don't use it as a glorified
take out loans as long as it's cash value. All good. Completely upside down, no savings. All I have is a 401k that I rolled into a Roth IRA 6 years ago, 55, and have a penalty to withdraw. Do you have something that will work for me? It just depends on what you're trying to do.
You got to be saving something.
Yeah.
Maybe we need to get you out there, hustling. It's, maybe give us a shot and we could send you some resources and see what we can do. But I would definitely start with a 3-day training. If you got, it's $297. If you use a discount code FINAL23, FINAL 23, it'll give you $100 off. So maybe start there and look for some new opportunities. Put a policy on a nephew. We can figure out a way to do that.
Yes, it's just more complicated. You have to get the parents of the nephew, depending on how old the nephew is, to agree, and then you're going from there, right? So
this is a funny one. Can you answer a question of someone who might argue that banks having FDIC insurance on the money, but what does an IBC policy have for protection?
Well, where do the banks put their money?
With the whole life companies.
It's a good answer. Well, I mean,
how about we start there? Oh, okay. So
go ahead. Sorry, Joe.
No, I'm done. My answer was done with where do banks put their money?
Yes, check that out, OJ. Look up bank-owned life insurance. $182.2 billion of conventional banks have their money in whole life insurance, so they don't even keep their money in the bank. Banks are federally regulated, which is why the FDIC insurance. Life insurance is statutory, meaning statewide. So then you have actually insurers of the insurance that offers protection as well, the guarantee associations. So there is protection in that for that piece of the answer that you are specifically looking for.
Mm-hmm.
So the FDIC insurance is a scam too. Like it's a joke. There's trillions of dollars in the banking system, and there's not even 1% of that available in the FDIC funds. FDIC insurance is not even insurance. It's not even federally regulated. It's an internal private fund that the banks all contribute to through you want to learn about the FDIC, go read the book called The Creature from Jekyll Island, and it'll start getting into some of that stuff for you. But at the end of the day, and it only covers $250,000, don't forget as well. So there's a lot of challenges with that. And if things really do hit the fan, as they say, good luck with that. There's, like I said, less than 1% of money is actually insured through the FDIC. So if we get to that point, there's a lot more problems in this world than your money sitting in a bank, in my opinion. But insurance companies have been around, the companies we work with, at least 120 plus years. I mean, it's they've been through the recessions. They perform better than anything in downturns typically. I mean, I could go on and on. We only have a few more minutes here, but there's so many reasons why the wealthy, why the banks themselves, why people are running to us right now to put money into the insurance companies and get it out of the banking system. And once you see that, OJ, it's hard to unsee. So just keep learning, keep studying, keep hopping on these, and we'll talk more about that.
I have a challenge for OJ and the whole audience here. Go out and find another company that has been profitable for over 100 consecutive years, every year. We work with 5 of them. So go find another company, because I don't know the answer. I could Google, but I don't want to. So I'm going to challenge you guys. If you have these questions, go look it up. Go figure it out. Go tell me who's been profitable for over 100 years and running. That's through everything you can think about financially. So
I need an FDIC sticker to go with my BYOB VIP of cash flow badge that I wear.
I like that badge. It's a nice badge.
It's like a banker. You know, the bankers all got them. They're
That's
VP
cool.
of BS. You guys know why everybody at the bank's a VP, right? Because it gives the bank the ability to put a whole life insurance policy on that individual. It gives them an insurable interest. That's the only reason they're all VPs at the bank. They're all VPs of cleaning toilets at the end of the day, but it's a whole nother story. All right. No offense, bankers. No offense. You guys got a tough gig. All right. What else we got? Gold and black.
And you get a dum-dum sucker too.
Is this Steelers? Oh, golden. Oh, you're talking about FDIC stickers. Put Steelers next week. Going to bring a little sports into this at some point, right? Christian's probably got what do you got, the Colts up there?
Yeah, unfortunately, we're going through it right now.
All right. You guys are lucky Chris isn't here. He would have really gone off on the FDIC thing. All right. This was cool, man. I know we kind of needed to end a few minutes early today, but any last minute comments, crew?
How's the baseball team doing? We want to talk sports. You're leaving to go coach Bryce's team. Like, how's he doing? How's the team doing?
I've been watching a rain shower come through, but it should pass right over. Good, man. Good. The kids are doing awesome. Got Bryce been pitching some and throwing strikes, and kids are all hitting really well. And it's been a lot of fun to really get into, out of T-ball and machine pitch and into actual, baseball. We're getting there. So it's a lot of fun.
Well, I hope you're not teaching him to snap a curve already. The way you just put your hand in motion, you were snapping a curve off. Don't teach him that. Don't wreck his elbow already. He's too young, man.
No curves, man. No curves. 100 companies. Oh, here you go. Nick's calling you out. 100 companies that have been around for 100 years. Have they been profitable the whole time, Nick?
Yeah, Nick, that's the next piece. That'd be profitable every single year.
Warren Buffett and Charlie Munger, 200 years. Warren Buffett's 200 years old. Damon, what's up, Damon?
We rocked it. Thank you, Christian, for being here for the first time of many.
Garnett and gold stickers. Florida State, baby. I'll talk about Florida State. Let's go Knowles, huh?
You like all the terrible teams, man.
Shocking the world this year.
Crazy you live in my state.
And then how about Miami, though, getting robbed, Damon? Robbed on Sunday night. How did the Philly Eagles have 0 penalties? And I can show you a video of 5 blatant holding calls and face masks, nothing called. And the Dolphins get crushed because of it. Like, come on, man. Let's go NFL refs. All right. Anything else?
No, that's it.
Thank you for that.
That's a good way to end.
All right. Well, if you guys need us, you know how to get a hold of us. Thanks for being here today. Jason, Christian, we'll see you back soon.
Yes, absolutely. Thanks, guys. Look forward to being on here again.
Nice to meet you, Christian.
Joe, Carson, you guys have a great day. Have fun at the practice, Joe, or the game. See you tomorrow in Vegas.
We're here now.
See you guys. See you on the weekend.
See you guys. Cheers.
Bye-bye.